Hey, how's it going, everybody? Happy New Year. Welcome back to the live stream, the first live stream of 2023. And we're going to start it off a little bit differently than how we normally start these streams. We're going to take a quick look at the Edge Finder. We're going to look at the market heat map. So I'm going to go ahead and share my screen with y'all. There we go. So taking a look at the market heat map, let's go ahead and see what currency pairs or the indices, commodities, any of the assets here that we have listed in the Edge Finder. We're going to see how they've been trending so far today. I can look right here at this box, all assets, and see that the UK 100 is our biggest mover to the upside so far today, up 1.34% on the day. Gold has been another big mover to the upside, up 1% so far. But let's see how some of these currency crosses have been trending. It looks like yen pairs are mostly down on the day so far. Swiss franc pairs are mostly up on the day so far. We've got euro pairs leaning towards the downside. Pound pairs are kind of split. Aussie pairs also looking split. Same with NZD. NZD JPY is down a lot, down 1.19%. And our US pairs, USDCHF and USDCAD are up on the day so far, but NZDUSD is our biggest mover to the downside for US pairs, coming in down 1.12% on the day so far. If we want to take a look at the watch list too, we can see, I'm going to go ahead and remove these neutrals just so we can see our buys and sells. USDCAD and NZDCAD look to be our biggest or our strongest buys of the day so far. USDCAD coming out with a score of a +8 and NZDCAD coming out with a score of +6. And GBP NZD, Aussie NZD, and GBP USD, strong sells, all with scores of -6 right there. So that's a quick look at what we're looking at today in the Edge Finder. We've seen how some of these assets are trending either up or down. We've taken a look at the watch list. And really quick, I also want to mention to you guys some of the different news events that we have going on. Not today. There's not a whole lot of big news events today, but tomorrow we do have Swiss CPI numbers coming out and US FOMC meeting minutes coming out as well. And JOLTS job openings, I believe. Let's see. Yep, JOLTS job openings numbers for the US FOMC meeting minutes coming out tomorrow, and Swiss CPI numbers coming out tomorrow as well. So that was a quick breakdown to get you guys caught up to date on what we're going to be taking a look at today and a little bit of the news that we've got going on tomorrow. I think Nick is about to hop in here in just a minute and go over some charts with y'all. So again, Happy New Year. Happy you guys are here. And we'll just keep on moving with the stream.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Hey, everybody, and Happy New Year. Welcome back to another live stream. I could not be happier to be here with you guys and doing the show again. It is January 3rd, so I feel a little cheated. Haven't had the markets open for a couple days now, but we're live. Things are going on, and I want to just invite you guys, invite you guys all back to the stream. Thank you for being here. If you're new, if this is your first time ever, let us know in the chat. Say hello, introduce yourself. And I'm just excited that you guys are here. This is going to be a great trading year. I can already feel it. Markets are very volatile, which if you're a day trader, if you're a swing trader, we love that stuff. We love markets that are moving. And so today we're going to dive in. We're going to take a look at some charts and some setups. And I'd love to let you know or ask you guys, where are you tuning in from? Comment in the chat. Where are you guys watching the stream from? And let's take a look at some charts while you guys respond to that. So pulling up our first one of the day, it's going to, of course, be the euro against the dollar. Here's a daily chart trend for you, and you can see overall to the upside, though today a little bit of a tough start for the euro to start the new year's with a move to the downside of about, what is that, about 95 pips to the downside, about 0.9%. And let's see where you guys are tuning in from. Canada, Quebec, South Africa, Oakland, California, Western Cape, South Africa, Australia, Zurich, India, South Africa, Barbados, Nigeria, Kenya, UK, Sri Lanka. Wow. Cool to see you guys all here. And I don't know about you guys, but I am ready for the new year. So here's the thing with the euro. Take a look at the technical analysis real quick. On the daily chart, we had a nice upward trend that seems to be being compromised, or at least being tested here today. A little bit of a double top, as we saw here against the around the 1.072 mark. We saw a price come up into this area and not once but twice fail out to make higher highs there. I'm sorry, we had a high here, but then we failed to put in a higher high over here. And now with the break of that downward trend, the euro dollar, with the break of that upward trend, the euro dollar looking a little bit bearish here as we start out the new year. Look at the 4-hour chart here. The 1-hour chart. And what we can see is we had a big drop in the euro USD, followed by a bit of a recovery here. And I think it's perfect timing to go ahead and take a look at some technical setups, perhaps on the more short side. Is the dollar going to get a little bit of a boost here in the new year? We'll have to watch and see. A big level, I would say, for the euro dollar shorts would be to watch out for something like this. You've got the 61.8% retracement around 1.0620. That could be an area of interest for sellers. Price does seem to be rebounding a little bit here this morning, but watch carefully as we retest those areas for possible sell interest as we get closer into that resistance point. I wouldn't say I have any trade as we speak currently here on the off the 1-hour chart, but if you do see price trail up into that zone, I would be more cautious and looking more on the sell side than anything else from a technical analysis standpoint. Now, we have a lot of things to take a look at here today, guys, but I want to ask you for some feedback. What charts would you like me to pull up? I'll try and pay attention to the audience the best I can today and do the charts that you guys want to look at. So just comment them, spam them in the chat really quick. This is your one excuse to spam the chat with what you would like me to look at. And I'll try and do a little bit of rotation. So I do like the euro dollar moving nicely here to start out the year. Nice big slip to the downside, and that's what we like. We like momentum to be picking up, and then that's usually where we're going to be looking for pullback plays, at least based on the style that I trade. Trend following, looking for momentum, looking for those great risk to reward trades as fast as we can find them. So yeah, thank you guys for some comments. We got Aussie yen, Aussie dollar, dollar CAD, Aussie Swiss, Euro NZD. Wow, we are seeing all over the place what you guys want to look at here to start out 2023 with. First one we did, I guess, was Euro USD. So maybe we'll rotate around and take a look at some of the majors first. Let's see some of the big ones on there: dollar CAD, pound dollar, and of course we'll see if we can find some setups. I have an idea on gold I'd also like to share with you guys, and we'll get to that. So stick around on the stream. Don't go anywhere. Let's take a look next at pound USD, which has recovered a lot faster. But look at this. Look at this movement here today. This is an ugly, ugly V move. If you were a bear, then it was a big tease this morning as you had a big drop here followed by a massive run back the other direction. So you had this huge drop, and give me just a second. We'll clean up. Let's actually just start fresh on this chart. So again, big drop here off of the initial move, and we've actually moved past the 61.8%. So this is a very impressive move here for the pound USD. Very quick shoot back the other direction and breaking clean through that 61.8% retracement. So as we watch the pound USD break through levels of what was resistance, you can see we are testing it right now. This is sort of the line in the sand, in my opinion, for the pound USD. If price breaks through that, it's looking back to sort of no man's land / bullish. But again, last line of defense in terms of sellers here around the 1.2033 mark. We'll see if that can hold. And a very nice V movement here from the bulls. I mean, that is an impressive slip back and forth. In fact, I'm wondering what's going on here this morning that's causing all this. There must have been some sort of, 100 pips to the downside followed by 115 pips, 120 pips to the upside. So a really impressive spike both directions, and makes me wonder what's going on with the S&P 500 here this morning. I've got a trade on. You guys may already know this, but we'll pull up my trade so I can show you this. If you're, we'll pull up the S&P 500 trade. So I've got an SPY trade up $1,700 here this morning. It's a good way to start the new year. We will take that. The S&P 500, one of my trades that I'm in long currently. Thought process here, again, basically the idea being I was shooting for a little bit of a Santa Claus rally off of a level of support. Didn't really happen. And so when we look at the S&P 500, we did hold this level. So my entry was here, which is looking brilliant now. At the moment, it was a little bit scary because I was thinking we might take out the lows. But after double bottoming here, I was saying, if this comes back, I'm going to take it for a long trade, see if we can catch a bit of a rally in the new year. So thought process here, if you're watching the S&P 500 for me, is definitely going to see if we can break clean through the highs. If we can break through 38.90, that'll be a big moment for the bulls. If we can get through there, I would say that gives us some free roaming to do with the S&P 500. But until then, we're still not out of the clear. We've got a lot of choppiness in this range. And again, this is a 1 hour chart. We're looking for a breakout above the highs in order to really see if this trend wants to continue. But that's where I'm at with the S&P 500 trade, floating a nice profit here this morning that was shared inside of our Discord channel. I'll show you guys that trade just so you know. I'm not making anything up. Here is the trade alert right here. Well, actually, it's been a while. I've been in it longer than I thought. Bought it on the 22nd of December. Nothing happened in markets for the most part for the last 2 weeks. And now things are starting to kick back up with volatility coming right on in here in the new year. Picked up S&P 500 on the long side, shared that trade alert within the signals group. If you're not already in the Discord, we do have a free Discord available. And my team here in the chat, if you guys don't mind, dropping that link for people who would like to grab access to the free Discord. Here is your Discord link right there. Click that link. It'll take you to a sign up form. You just click that link, fill out the details, and you'll get sent a link to join our free Discord channel, which comes packed full of free value, trade ideas, analysis being shared. We have PDF downloads for you to build a better trading plan. It is the perfect time to start fresh here in 2023. If you had a tough trading year last year, if you're new to this stuff and you realize, hey, it's not all that easy, then I would encourage you, take that free Discord, download a bunch of that free stuff that's in there. You have like how to build a trading plan, how to do all this and that. There's a bunch of free stuff in there, and it genuinely is free. I'm not just saying that. There's a lot of good stuff in there that we put together. So grab it and enjoy it. And again, that's just well wishes from myself and my team for the new year. All right, so I do like the S&P 500 long, and if we can break through this high, that'll be great. We'll continue to hold that trade, see if we can, again, big contention point is this 3873 on the S&P 500 as we go into the first trading day of the year. So, yeah, let's see. Gold is going to be our next one. We'll pull up XAU USD, and look at this, you guys. Gold flying to the moon, it seems. Back to 1848, just shy of 1850 here, where we tapped out and topped out last. So gold looking bullish, man. I put out a tweet this morning about potentially looking at that 50% to add to a trade, but I didn't get it. We never saw price come back down to that 50% mark. Would have been nice. Woulda, shoulda, coulda. Looking really strong here for the bulls. So if you're in a gold trade right now on the long side, then congratulations. Things are looking healthy for the gold chart. So nice start to the year for the gold bulls out there as we see price retesting the highs. The next question will be, of course, can we break those highs? If we're thinking about it from a trend following perspective, sure, you had this big move, but we're at a question mark point. Are we actually going to be able to break through those highs to continue this run up, or is this going to sort of stall out and fall back before finding buyers again? So we'll have to watch and see. Again, there's no trade for me at this point. I mentioned this morning, I tweeted it out. I would have liked this 50% retracement, didn't get it. So that is just off the table. So there's nothing to do here with gold. No FOMO here, not going to be buying and not going to be shorting such a strong market on the start of the new year. And again, dollar coming in, we'll take a quick look at the dollar. Dollar dropping dramatically after this rise, giving way to some nice moves for things like the pound, the gold market, etc. And the S&P 500 as well, seeing a bit of a relief rally off of this dollar movement. Does anybody know what happened with the dollar here this morning? What is this massive up and then followed by a down move? Did we get some news or something? Let us know in the chat if you have some information for us. But definitely interesting to see. We'll be watching that one closely. Of course, if we share any trade ideas, you'll see them inside of the free Discord linked in the chat. So let's keep going. I want to show you guys some more stuff that I've been looking at from the Edge Finder point of view. We'll take a look at some of the watch lists here today. James had mentioned in the pre-stream a little bit of some of the watch list pairs. Let's actually do some analysis on them a little bit more in depth here. You got a lot of pound pairs on the downside, and I want to show you all pound yen, which might actually be setting up here today. So pound yen, here's your 1 hour chart. Let's pull this up. If you're more of a day trader, right, this might actually be an interesting point for the day traders out there. Pound yen pullback here to the 50% retracement, and actually even trying out here to see how this candle closes will be very interesting. So you're looking at pound yen, which has been trending well to the downside to start out the year. We've seen a bit of a recovery here. And as we tag that 50% retracement at 156.88, the pound yen is tapping resistance at the 50% and structure looking left. So I would say if you are short biased in the pound yen, it'll be very interesting to see how this candle closes. And you can see rejection coming into this candle as we speak. Does that mean that the pound yen can't rally higher? No, the pound yen could, but this is why we use stop losses. And when we have a trade idea, it is an idea. It's not a guarantee. We're not certain about anything. And I think, as you start out the new year, don't overestimate your ability on the charts. In fact, you should probably underestimate to a degree each setup that you take. And what I mean by that is, of course, trade confidently, but don't trade arrogantly. So if you take a trade and you're looking at pound yen, you're saying, okay, yeah, this thing, if this candle closes bearish, then maybe I'll take a stab at taking a sell trade. If that's what you choose to do, still acknowledge the fact that things could go wrong, right? Things could shoot to the upside. And what are you going to do about it? If you're risking 50% on your account, you're going to be out of here before February even gets here. Don't let that be you guys. Trade smart, trade small, and don't overestimate your ability, right? I've been trading this. This is going to be my 7th year of trading the markets. And every year I've been more and more conservative in my approach. It's been such an important thing for me to learn over the years is the less arrogantly you trade, generally speaking, the better you trade. Arrogance in trading is a account blower. It is absolutely true. So looking at this 50% mark, again, I like it on the short side, looking for a continuation to the downside. And let's take a quick look at the fundamentals a bit, see what smart money's doing on the pound yen. Let's get a quick read of the room. And again, pound yen across the room getting a sell bias. We'll go to the minor currency crosses and we'll scroll down here and find GBP, JPY. I'm pulling this up. This is going to give us an overall view of the chart. So again, of course, you can look at the chart and get some information, but you can also look at the fundamentals and the sentiment analysis delivered by the Edge Finder to get a full picture. And what we can see is we have a -5 score, and that score equates to a sell bias on the Edge Finder. And what we can see is all of the different categories broken down here for you. So you have COT data, retail sentiment, seasonality, trend reading, GDP growth, inflation, unemployment, and interest rates. All these factors contribute to the directional bias that we have on a particular asset. So in this case, GJ, COT data is a bit mixed. It points more towards buying the pound than the yen. So that goes against us. That is more of a bullish indicator. But retail sentiment, look at this, you guys. The crowd is 84% long on the pound against the Japanese yen. The trading crowd, which tends to lose money, unfortunately, is super packed into a buy trade on this. And so if we know that, that's going to be a bias more to go the other way and be on the sell side, right? So at least that's how I look at it. If you know that the retail traders tend to lose money, brokerages put that data out there that traders, that clients consistently overall lose money. If we know that information, then I'm not going to be chasing the same trades that they are. So with that information, then I'm going to also take a look at the next category, seasonality. The month of January, as we see right here, tends to be a negative month for the pound against the Japanese yen. That's vital information, knowing these two things by itself. But then we can keep going down the list. Trend to the downside, that's pretty obvious. We get -2 in that category. GDP growth, inflation, and unemployment. These are fundamental economic numbers that do impact the value of the currency cross. All point towards selling the pound and buying the Japanese yen. Unemployment, inflation, and GDP all point towards favoring the yen. Interest rates do in fact favor the pound, but for the most part, we get a net score of -5, gives us a confirmation to be on the sell side primarily based on what the edge finder is saying. Of course, you do what you want. The edge finder is just a scanner, but this is how we use the edge finder each day. So we're looking for this, and this is looking to set up pretty nicely. We got 10 minutes left on this hourly candle. We've got edge finder bias to the downside. We've got technical analysis looking pretty good here to the downside. All sounds good. And so that might actually be a trade setup, right? So if you don't already have the edge finder, if you want to try it out, we do have a free trial available. Just grab it, try it out if you haven't already. It's free to try. So we'll drop that link in the chat, and you guys can fill that form out. One of our team members will reach out to you and actually get you set up with the edge finder if that's something that you're interested in using in your own trading. We have many traders. We have over 1,000 people using the edge finder on a consistent basis. And I would encourage you, if you have not already tried it, try it. See if it's something that would work for you here. It has really changed a lot of, my team, as well as many traders are using this thing consistently. Hundreds and hundreds of people are using it on a daily basis for a reason. We've worked really hard on it. So check it out if you haven't already. Click that link. And GJ is on the list. So I like GJ here at the 50% on the sell side. Let's move on, see what else we can find for setups going into this week. So Aussie yen, possible sell setup, gets a -4. Very interesting. Possible sell, says Tracy. Yeah, Tracy, I would generally agree. A lot of the yen crosses look sell heavy. So interesting stuff. Pound dollar actually getting a nice overall strong sell reading, which is pretty aggressive. Pound pairs across the board seem like they've got bias to the downside here for the time being. With euro pound, which I think we should look at euro pound. I made some money on euro pound the last week of I'm so glad I got out of that one. Look at that. So let's break this down really quick. I took a trade here. You can see my order. This little blue arrow is an order on my broker. I trade on Oanda. And you can see I picked it up here, closed it out here, and I'm very glad that I did, because you can see price has completely reversed back the other direction here today. As we start out the new year, seems like euro pound is slipping back here, losing a lot of that gain that it made. So I'm out of that trade. I'm glad that I am, because made some money on that one, and watching to see if there's something else here to set up. So euro pound does still have a bullish bias, and let's actually see if there's anything we can do here with it. We're kind of entering into a sideways market. I wouldn't necessarily say that this thing is full on bearish at this point. If it breaks through major support here around 87.80, then yeah, I would say bears have control. But currently we are just retesting major levels of support, and you very quickly, by the end of the day, even could see euro pound shooting back the other direction. So I'd be cautious on the short side here as you near support levels. But euro pound looking potentially interesting. I don't love it as much as I loved it over here, because over here we just had this clean uptrend, but still nonetheless relatively bullish. I would like to see some reaction to that area. Let's go back and see what else we have on the list. USDCAD I already know is pretty choppy, so I don't want to touch that one just yet. Let's see. AUD USD on the sell side here this morning. Let's go take a look at the Aussie against the Japanese yen. I'm sorry, not the Japanese yen, the US dollar. We broke out of support here. Take a look at this upward trend. Fell apart a little bit here, and we can actually probably draw some fibs right off the bat. And that actually looks pretty clean. So AUD USD on the sell side here. A retest of that 61.8 looks very good. That's a trend line breakout retest, as well as support retest, turned potential resistance, and the 61.8% after a trend line break. I mean, that's a lot of technical technical analysis I just threw at you all at once. But this is a pretty clean setup, I would say. This is a 4-hour chart. We drew our fibs from the top here to the bottom here that we made here in the London session. A bit of a rally coming back, and as we near that 61.8%, looking left, we have levels of support here that were broken. So a retest could actually be an interesting sell side opportunity on AUD USD. What do you guys think? You like Aussie dollar? This one actually looks pretty clean to me. When a trade reverses to your entry, how do you decide when to take a break even or leave the trade on? So I used to move stops to break even a lot more. And it's not that I think it's wrong to do per se, but I often will just leave my stop loss in place without touching it until price makes a move of usually at least a 2 to 1 or a 1 to 1, or sorry, 1.5 to 1, at least, looking mostly for structure. So for example, like if I took a sell here, right, and put a stop here, price comes up and let's just say things go in my favor, right? I'm not going to move my stop loss just because we have a reaction. What I'm going to look for is price coming down to a level of major support like this. And then I'm going to take that stop loss. I'm going to move it and lock some profit in. That's how I trade. I like to trail stops and watch for retests of structure just because markets move in your favor a little bit. I don't like to just go ahead and snap price to break even as much as I used to do that a little bit more. But I spent a lot of time back testing, and in my own strategy, what I found is a lot of my trades, in fact, a large number of them were doing stuff like this, where it would just grab me back to break even, retest that same area of structure just enough to break even on the trade. And so what I started doing, I tested this theory where I waited until market structure, we had a run in my favor before trailing that stop, and that actually ended up being a more profitable style of trading according to my own sets of rules. So I encourage you, if you have questions like that, test it yourself. Spend some time back testing. That's going to be the name of the game. That's where you're going to find the answers to your questions within your own trading style and strategy. All I can tell you is just spend more time back testing. If you think you've back tested enough, you haven't, because I back test to this day. I spend time on the weekends, and we even do a live stream once a month where I do back testing sessions. So if you're new to the channel, there's so much value on what we do here. We put out a lot of free stuff. Make sure to subscribe if you're new, especially if you're a newer trader and you're trying to get this stuff down. A great thing you could do right now is subscribe to my YouTube channel, turn on the post notifications, and tune into the live streams each day. It is free value, whether it's me on the camera or if we have a guest who takes over. You're getting free value here, free quote unquote mentorship or learning experience through people who have been doing this longer than you. I think that's like the greatest thing about YouTube is you can learn from people who have been doing this stuff for a long time. So let's check on the S&P 500 trade coming back against me a little bit here. We were up 1,700, now only up 1,100. So a little bit of a pullback there on the S&P. Let's take a look at SPX 500. So you can see retesting that level of resistance, we saw a bit of rejection. So not the greatest start here, but we'll see. We still have plenty of time here, remainder in the New York session, to see if price can come back and retest this. Oftentimes you do see price retest just to break out again, right? This is a natural flow of price. Many people freak out when price doesn't move instantly in the direction, but remember, markets move in waves. They move in, they don't move all in one direction. Now, granted, if price breaks through the lows, I will be confirmed wrong about my idea. I'm bullish on the S&P. If this breaks, I'm out of there. I will admit defeat. I will walk away with a loss. But if I can see this thing through, I'm going to let it bounce around if it needs to before potentially breaking through those highs and looking for that breakout that I want. So if it happens, great. If it doesn't, it doesn't. But that's where we're at with the S&P 500 trade. Again, if I make any updates or if I share any trade alerts, you guys will see them inside of the Discord. And if you don't already have the free Discord, grab that free Discord channel. We dropped it in the chat earlier, but we'll drop it one more time. Grab this link right here, fill out that form. It'll take you to sign up for the Discord channel, and you can get access right away there. So take advantage of that. So there you go. So let's see what else. Still watching the S&P 500. That's my only trade so far here. How's that GJ trade looking? GBP/JPY. Look at that reaction, very hard on camera here as we spoke about this 50% retracement level. That 15-minute chart dropping 40 pips. That's an incredible quick drop there as 10 o'clock rolls around. Very interesting. Still like it to the short side. I would say it looks pretty attractive here. Stops above the highs. If I take that trade, you guys will see it in Discord. But I do like GJ on the short side with the confirmation from the Edge Finder off the watch list today. So looking pretty good. We'll keep an eye on that one, see what goes on with GJ here this morning. So yeah, I like it. So if you guys are ready, we can bring in Jake here now and say hello to Jake, see what's going on, and we'll go from there. Hey, Jake, how are you, sir?
What's going on, Nick? Hope you had a good new year.
You too, man. I'm excited to be back on the charts. I don't know about you.
Yeah, I am. I took like a good break. I was sick, so it was kind of perfect timing, plus the holidays. But I took a good little break from the charts, and I feel like I'm back and ready to go.
Good. And if you want to pull up we'll switch the view to your charts. What are you looking at here to start the day?
Well, obviously, the first thing that I noticed was the dollar making this move and now kind of retracing this move. So the number one thing that I'm looking at the dollar here is we're definitely losing some of that bearish momentum as we approach this little daily demand level here. What's interesting is if we go back far enough, this is like a perfect retest of this previous area back here. So if there was ever an area where we get some relief on the dollar, especially with the beginning of the year, I think it could be now. So I'm just kind of waiting for some bullish structure to come back to the dollar. And I think those could be some really nice trades. Like we could see a lot of downside on Euro USD, Pound USD. I know Pound USD is getting a pretty strong edge finder reading right now. So that could be something that I look at. If the dollar can reclaim some of this bullish structure, make higher lows, maybe I can get in on some action there. I have a few other things that I'm looking at, but that's like the main thing.
Okay, so you mentioned Pound USD on the sell side, you're thinking mostly?
Yeah, I think Pound USD on the sell side right now, obviously the dollar is kind of ducking back into this little range that we've made here. So as long as it's chopping around like this on these lows, I'll probably leave it alone. But if we can get that nice bullish impulse, I thought this was going to be it this morning with that bullish impulse. But if the DXY can get another nice bullish impulse here, get a nice retest, if I jump over to Pound USD, there may be some opportunities there. I know it's a a sell on the edge finder, so I'm kind of doing this all in real time. But maybe if we pop back up into an area like this, and then we start to look bearish again, and the dollar starts to look bullish, we could get some sell side happening there. So.
Yeah, I like that trade. I think Pound USD definitely lost a bit of its steam here last week. And so now with that structure forming to the downside, I'm with you. I think like a little bit of a lower high action could be a nice little swing to the downside. Pound dollar, one interesting thing I was talking about the other day was that inflation in the UK is actually still very much going strong. Like in the US, we saw it top in June, things have pulled back and a little bit of a normalization there. Not so much in the UK. Inflation's still red hot there. And, definitely a cause for concern in terms of the currency itself as they lag behind in central bank stuff. So I'm with you on the Pound USD. I think that one looks a little sell heavy as well.
Yeah, I like Pound USD. Honestly, just from the technical perspective, I think like you were talking about AUD USD looks pretty good here. I have to clean up some of these charts because I haven't looked at them in a bit. But like if we get that retest up into this level up here, I think that looks pretty good on AUD USD. So I think there's some good USD cross opportunities coming up. I know USDCAD still ranks pretty high, but it's just a matter of like waiting for the right technical setups at this point for me. So.
Sure. Well, cool. Well, Jake, I'm going to leave the stream to you. Before I step out, guys, remember you can go follow Jake on his own YouTube channel. He's got some great content over there. We're going to leave the link in the chat for you if you'd like to check him out. And Jake, enjoy the stream, and we'll catch you later.
All right. Thank you, Nick. What's up, guys? It's good to be back. For those of you who have tuned into my previous streams here, it's nice to see you guys again. And we're going to get into some stuff. Like I was telling Nick briefly before, I took a nice break from the charts. I was sick, plus there was the holidays. And so I just decided to take a little bit of a break, a little hiatus from the charts to reset mentally and then be ready to go for the new year. So I'm literally just jumping on the charts. Like this morning is the first time. Well, a little bit last night, but mostly this morning is the first time that I've really sat down and started diving deep into the charts and analyzing this year. So we're going to be getting into all that today. Answering some questions, going over some setups that I see. So don't be afraid to leave some questions for me. And if you guys are new and this is the first time you're seeing me, my name is Trader Jake. I am like a low time frame swing trader or intraday trader. I have a lot of similar ways to look at the market than Nick, but I also do have some different ways to look at the market, and hopefully I can share some valuable insight with you guys today. Can I please analyze Euro JPY? Yes, we'll definitely take a look at that. Cool. All right. So I already kind of briefly mentioned like what I'm looking at for the dollar, right? So I'll say it again, but basically what I'm looking at here on the dollar is that we are in an interesting spot, right? And what I mean by that is the dollar has come down, right? We know we've been bearish on the dollar for a little while now, right? As they're slowing down these interest rate hikes, as inflation starts to become a bit more tame in the US. And then also as we start to have some recession fears, we're starting to see the dollar kind of move down as we've seen in the past couple of months. But now we're seeing that momentum slow down, right? We're not seeing that strong bearish impulse. We're not seeing this type of move here on the dollar where we just shoot down with massive volatility. What we're seeing is this kind of grinding, downside momentum, which seems to be potentially coming to a halt. And then if we look here on the daily, could we look at this as a potential double bottom here that we kind of just did, right? So we have one distinct bottom, and then we have two distinct bottoms, and we have a nice bullish impulse off of that low. And what's interesting about this low is that this exact same level was also demand here before the rally up to the upside there back in June of 2022. And then if we go as far back here as December of 2016, this was the market highs for the DXY back then before making a rally to the downside. So there's a lot of confluence on this level, right? There's a lot of confluence on this level. There's a lot of previous interest on this level. And anytime you have a level like that, you can expect some kind of reaction. And that's what we are seeing here on the dollar to start the new year. So now the question is this bullish momentum going to be sustained? Could we start to see a bit of a rally here on the dollar, right? Could we start to make some bullish momentum and maybe we can rally up into these highs up here? And this doesn't mean that the dollar is going to be king again. This doesn't mean that the dollar is going to, rip back up to all-time highs, but it would make sense from just a technical perspective to maybe even do a retest of some of this demand here or some of this supply up here before then getting a move to the downside again. So whether you're overall bearish or bullish on the dollar, you have to factor in a potential move to the upside. And that's kind of why I like looking at the dollar to the upside, right? I like looking at the dollar to the upside more than I like looking at the dollar to the downside, just because I think there's more to offer to the upside, right? There's more risk to reward. So that doesn't mean I'm just going to jump into a trade, though. I need to wait for the right conditions. And I thought that may happen this morning as we were breaking through these highs, but then we deviated back below those highs, and now we're trading back inside this range. So right now, I'm not going to be touching the dollar, right? I'm just going to be waiting for us to create some sort of bullish structure. If we could put in some sort of support, reclaim these highs, right, then I can start looking at potential dollar upside in the form of some of the USD cross pairs. What concepts do I use? Just simple supply and demand teku, just support resistance. I do use the edge finder for confluence. I use the Fibonacci for confluence. But if you want to see my exact strategy, you can check out my channel. S&P 500, we'll look at that. We'll look at USDCAD. AUDCAD. Hey, Jake, what do you think of using multiple objective strategies? It came to the conclusion that legit strategies make 70 to 100% a year. 70 to 100% a year is a lot, Kejbu. That's a lot. 70 to 100% a year on average, right? You're not just talking about a one-off year. If you say 70 to 100% a year, are you referring to doing that over many, many years? Because that would be an incredible strategy. So if you can actually do that, then you should just do that. What are my thoughts on GJ? All right. Yeah, we'll take a look at everything, guys, I promise. But I do want to take a look at GJ because there is some interesting stuff happening here on GJ. So let's actually jump back over to the Edge Finder, right? Edge Finder, GJ is showing a -5 sell, right? -5 sell. The only thing in favor of GJ buys is COT data and the interest rate divergence. But everything else is pointing towards the bearish side for GJ, right? And we've also seen a lot of these yen pairs look pretty bearish. So we know that the yen is showing some strength and we know that the pound is showing some weakness. So, looking at GJ sells is a pretty good idea in my opinion. But here's the thing, right? Here's the thing. And this is something that I think not a lot of people kind of look at. And this is why I like to look at the higher time frames. Let's just look at the week and the month and even the yearly candle, right? What we can see is that GJ has no top wick yet on any of these candles, right? We have not made highs for the year. We've not made highs for the week. We've not made highs for the month, right? So what does that tell me? That tells me that I want to see those highs get made before I enter any sort of swing short position on GJ. Because if I'm in a short position on GJ, even if I'm going into profit, I'm always going to be worried about the fact that we could just instantly pop back up, make the highs for the week or the year, and then create that top wick, right? So that's always in the back of my mind. So I would much rather create that top wick and then look for shorts. So right now we have the top wick that could be made right above these highs right here. So we can go ahead and put a little level right here. That is where the highs for the week, the highs for the year, etc., can be made. So if we can run that area there, I'm going to be a lot more bearish on GJ because we have the edge finder bearishness, right? We also have this level right here, which should act as a strong supply level. And if we go ahead and take our Fibonacci from the swing highs to the swing lows, we have that golden zone kind of 50% to 61.8% area right in that level as well. So if GJ, right, and I told you guys I am like a shorter time frame swing trader. So if you're kind of a swing trader looking on some of the higher time frames, like the 4-hour time frame, right, if we pop back up into this area of supply, I think there could be a really nice selling opportunity there on GBP JPY. So that's why I have an alert set there, right? And basically what that would mean is that we would flip, make that top wick, and then we could continue to the downside. So that's why I like that on GBP JPY. And trust me, guys, I'm going to try to answer all your questions, but there is a lot of questions, so please be patient. AUD JPY, pound Aussie. All right, just to try to keep things organized, and then in the theme of the JPY pairs, we'll take a look at AUD JPY. AUD JPY, again, it's also pretty bearish, right? I mean, just look at this technical structure. We had a level of support right here, right? We had a pretty strong level of support that was broken to the downside with a very big impulse move. We then retraced all the way back up into that area, got a retest of that area. You know, if we take a look at this on the fibs, we got that perfect 61.8% retrace there on the daily chart. And then now we're getting another daily impulse move to the downside. So I think that there is definitely some more room to go down on AUD JPY, on like a lot of the JPY pairs. So that's why I'm going to be pretty bearish on some of these pairs, right? So at this point, though, what we have to look at on AUD JPY is the fact that we are kind of starting to test down here at this previous level of support. And what we have to consider is that there may be like a double bottom or some sort of support being held here, right? So you don't want to just instantly jump into shorts when we're already this extended to the downside, because the best shorts have already happened. So now we have to wait for one of two things, in my opinion. We either have to wait for these lows to be broken, and then we can just continue shorting it on that retest, right? Then we know these lows are broken. We know there's not going to be a double bottom. We can continue shorting with confidence there. Or we have to wait for a more significant retest, maybe back up into an area like this, where we have this kind of previous little level of 4-hour support up here, right? If we can get that retest up into there, then maybe we can continue to the downside. Also, that would be about 50% of this move being retraced. So that's kind of what I would look at for AUD JPY. I would either wait for some sort of pullback to potentially get short, right? Wait for like that 50% pullback at the very least, or wait for these lows to get broken, and then we can continue to the downside. So that's kind of what I'd be looking at for Aussie JPY. Euro JPY. Okay, we've had a few people ask for Euro JPY, so we'll stick with the JPY pairs for a second, and we'll look at Euro JPY. Now, Euro JPY versus Aussie JPY, can you spot the difference, right? Aussie JPY has not broken these lows yet, whereas Euro JPY has broken these lows. So that would tell me that Euro JPY is leading as far as bearishness, and obviously Euro is a little bit more bearish right now than the Aussie dollar is. So right now on Euro JPY, right, I'd say you're just probably waiting for a pullback up into this area here, similar to pound yen, and then could we potentially get some more downside there on Euro JPY? I mean, from a technical standpoint, it's pretty straightforward. We have lower low, lower high, lower low, right? Wait for that retest now to make the lower high, and then we can continue to the downside. So whenever that lower high comes, you know, maybe we get a little bit more downside here, but then eventually if we come back up and retest this area, I think there could be a good selling opportunity there for Euro Yen. You know, and you can start to look at areas like this as potential targets. Could look at areas like this as potential targets, right? You just find that demand on the way down, and those could be potential targets on a move to the downside. Am I taking any trades? I'm not in any trades right now. I do like the idea of waiting for pound yen to come back up into this area. So that's one thing that I'm waiting on. And then I'm also waiting on the dollar potentially reclaiming these highs. And TradingView is going to do this weird thing again where it just doesn't delete my old stuff that I've already deleted. But that's okay. We'll just delete it. Yeah, by the way, guys, the stream is not ending. The stream is not ending. If you're watching on Trader Nick's channel, if you're watching on Trader Nick's personal channel, the stream is moving over to A1 Trading in their separate A1 Trading channel. So click the link in the chat right now. Stream is not ending. I'll be here for another 30 to 45 minutes or so, and we'll get into some more stuff. How long did it take me to be consistently profitable? Well, 2022 was the first entire year that I was consistently profitable. Before that, I was just kind of breaking even. A lot of 2021 I was breaking even. In 2020 I was still just like learning. So I would say 2022, it took me like 2 years to get to the point where finally I started to make some money. AUD pound AUD. Sorry guys, there's so many pair requests here. I don't know if I'm gonna be able to get to them all, but I'll try to get to them. Pound AUD. Okay, we'll take a look at pound AUD. But yeah, just to quickly wrap up, if the dollar can reclaim this area, like we already talked about, sorry to get sidetracked here again, but I like the fact that dollar's potentially double bottoming. I like the fact that this momentum is running out on this downside. I like the fact that there's confluence with this previous little level of demand right here, right? And I like the fact that there's confluence with this previous area all the way back here. So I think this is a good area for the dollar to kind of bottom out, at least in the short term. So I'm simply just waiting for bullish price action to come back into the dollar, right? And maybe at this point, honestly, I just look at this area here as the more significant kind of supply level because that's where we sold off into. So if the dollar can reclaim this area here, that's going to be where I'm really looking for to get bullish on the dollar again. And that'll be that. But I'll move into GBP AUD because we'll try to keep chugging along with these pair requests here. But also, guys, if you have other questions other than pair requests, I'm happy to answer. Hey, Jake, do you have a personal YouTube channel? Yes, my name is Trader Jake. Let me get rid of all these drawings because most of them are old anyways. All right, let's see. Does Pound Aussie have any sort of strong reading? Pound Aussie does not have any strong reading, so that means it's a neutral reading on the Edge Finder. Man, this is just a hard one. It just looks kind of choppy. You know, I would have said that it was bearish, but now that we've kind of like made some new highs. Potentially, it does look sort of bearish, right? Like if you look on the 4-hour trend, if you were to just to zoom in on this 4-hour trend and that's the only thing you're paying attention to, you would say that this looks pretty bearish, right? So if Pound Aussie did move up into this kind of 4-hour H1 like or H4 previous high and start to get some bearish momentum off of that level, right? Maybe it could continue to the downside there. We know the pound has been pretty weak today, although it is making a rally now. But yeah, so if Pound Aussie did move up into this high here and fail at this level, then I think shorts would be warranted, right? But I don't think Pound Aussie has the best trend though. Like I think there's other better trends in the market. So this is not a trade that I would personally be looking at. Also, right, when we look on the Edge Finder, I like to focus on pairs, generally speaking, that have a strong reading one way or the other, right? So what I do is I filter out for the neutrals. So I could put the neutrals back on and you guys can see. But I kind of just use this as a watch list, right? I use this as a watch list. So I don't really care about or want to pay attention to anything that's getting like a 0 or a -1 because these are not the strongest trends in the market, right? I want to focus on the strongest trends in the market so I can get rid of the neutral biases, right? And now I have like a pretty good list of things to look at. That is kind of how I go about it. So the fact that Pound Aussie is a neutral reading, is generally is not something I'm going to be looking at. USDCHF. Yeah, we'll take a look at USDCHF. Okay. Yeah, so USDCHF, I mean, this has been very, very bearish. I mean, the Swiss franc started to get interest rate hikes at the end of last year, and we started to see the Swiss franc get strong, and also at the same time, the US dollar was getting interest rate. It was getting interest rate hikes, but the Fed was starting to taper, right? And that kind of implied dovishness, so to say, led to that dollar downside. At the very same time, the Swiss franc was getting strong, and we've seen a massive move to the downside on USDCHF. So I do think if the dollar gets strong, that there could be room for USDCHF to move to the upside. But I don't really love this. I don't know. It's just been so bearish. I think probably we come back up to these highs here, even if you're bearish, right? I think probably we come back up to these highs here. So at this point, like, let's just say we look at this area because we just kind of use this area as support here. We just use this area as support. So, I mean, if you were to get bullish structure and maybe a break and retest of this level right here, right? I don't really like this whole area here, but if we were to get a break and retest there, like after the dollar gets strong, then I'd potentially be interested on something on USDCHF. But I think, honestly, I'd prefer to take something on USDCAD, right? So these are all things where it's like, all right, you know, if I'm looking at USDCHF, well, if I think there's a better opportunity on a different USD pair, why not take that? And I think USDCAD, again, trading views, not deleting my things. But USDCAD has a much cleaner setup, in my opinion. Like, we have these very clear highs right here that we rejected off of this morning. But if the dollar gets strong, like I think it might, if the dollar gets strong, like I think it might, and USDCAD can break above these highs here and get that retest, I think that'll be a much, much cleaner setup than anything you'll find on USDCHF. Also, we have USDCAD currently the strongest buy in the market with a +8 reading on the edge finder. Every single category is bullish except for inflation, right, which is only a -1. So looking at USDCAD, I think there's a much cleaner setup here. Just need to wait for these highs to get broken, signaling to us that we've put in a higher high in the market. We wait for that retest. We wait for that level of support to be tested, and then we can potentially get a move to the upside. So that's kind of the type of setup that I prefer to take. We have the edge finder bias. We have the CAD's been generally weak. If the USD gets strong, I think that could be a good opportunity. Sorry, I'm going to read back some of these questions here. If I have 5K deposit, how many trades can you take per day? I would not think about it as how many trades should you take per day. Think about how much should you risk per day. So you have to pick an amount of risk that you want to risk per day. Maybe 1% per day, maybe 2% per day is typically the range that I would prefer to stay in. And you can go from there, right? So if you're going to take 3 trades a day, but you only want to risk 2%, then you need to risk, 2 divided by 3. Split that up into your 3 trades, but don't exceed the amount of risk that you're going to take on any given day. What is the most important thing to building a strategy? Price action, supply and demand. Well, I think price action is probably the most important thing for most traders, because at the end of the day, that's what we're doing. We're trading the charts, and what we see on the charts is price action. So understanding how to read price action is probably the most fundamental core aspect of most trading strategies, at least most that you'll see on YouTube. I'm sure there's some, algorithmic trading strategies that hedge funds use that people don't care about price action at all. But for the most part, you're going to want to care about price action. So I'd say start there as the kind of important building block to any strategy. But of course, there's many, many different things to consider in a trading strategy, and every strategy is different. So USDCAD. We just did USDCAD. I just kind of shared with you what I'm looking at on USDCAD. I'm waiting for a potential break of these highs here on the 4-hour. I'm waiting for a retest into this area, and then potentially another impulse move to the upside. Like, we've been trending up. We have these clear highs here. USDCAD's been generally bullish. So I like the idea of being bullish on USDCAD. I just need to see a break and a retest of these highs. Yeah, that's kind of my opinion on USDCAD. Right now, we're rejecting off of these highs here. So we just have to be patient and wait. If this continues to reject to the downside, then of course there's no buy entry there. There's no buy entry unless we break through these highs up here and then get a retest of that level as support. Can I check in on gold? Yes, we could check in on gold. Yeah, so guys, and it's very easy. You can just look at the DXY too, right? Like the DXY is in a range here. If we look on the H1, we have range highs, we have range lows. So I'm a trend trader. I don't like trading in ranges. I like trading impulse moves when we're in a trending market. So right now, even though we've got some nice move to the upside here this morning on the US dollar, we did reject off of those highs, creating a range now. So we have to wait, in my opinion, for my strategy, right? I have to wait for price to either break above these highs here or break below these lows here. So this is where waiting and kind of patience is just a factor. And this is why I really only take 3 to 5 trades a week. I don't need to trade every single move in the market. I just need to take, a few good opportunities every week. But we'll check in on gold. How do you start learning to trade stocks? Well, mostly on this channel, we do focus on Forex and the indices. I think Nick specifically, Nick focuses a little bit more on the stock indexes than I do. But generally speaking, this is Forex here. So this is not necessarily, trading stocks, Naveed. But I would recommend potentially just doing some more research on that. If you want to trade the stock indexes, right, then you would need a broker that allows you to trade stock indexes. Like the S&P 500, like the NASDAQ, like the Dow Jones, the US 30, right? NZDUSD. All right, we'll go gold, EU, NU. So gold has been really bullish, guys, and I've been doing some reading and following kind of a few people that I think have a good perspective of the market, especially on gold. And what's interesting about gold is, right, gold and the dollar are inversely correlated, right? Typically, a strong dollar means weak gold, and typically a weak dollar means strong gold. And typically, the gold and like the stock indexes, like the equities and risk on, at times they can be positively correlated. So there are times in the market where if stocks are down, then gold is going to be down, right? Because the market is treating all commodities and equities kind of as like risk on. What I'm starting to see now, though, is more of a fear of a recession in the US, at least, right? And as those recession fears kind of ramp up, gold historically during periods of recession and during periods of recession fears, gold tends to perform well as a hedge or as a diversification to protect against the recession or to protect against the degrading dollar, etc. So right now, as recession fears start to pick up, I think gold has been catching some of that demand, and we've seen an impressive rally on gold to where gold has actually outperformed a lot of the rest of the market during this period of dollar weakness. Hopefully that all made sense to you guys. But right now, I still think gold looks pretty bullish. I just think you need to wait for a pullback. So I kind of have this area here. If gold were to pull back into this level here, right, picking up some gold, in my opinion, off that level would be a pretty good idea. We've been trending up. It's been a good idea to just to tag pullbacks on the buy side in this market. And if we go ahead and just look on like the H4 or even the daily, right? If we look on the H4, we measure from the lows to the highs of this level. That would be like the 61.8% level. We have a lot of demand in that area, right? We have this previous level of resistance, order block, whatever you want to call this, right? And then we also retested this area here with a big wick. And then we also built up some sort of demand, another like a bullish order block off of this level before moving to the upside, right? So if we retest into this level here, it could be a good idea to potentially get long on gold off of that level, right? Because it's right now, gold has its own narrative, sort of, in my opinion, like I was just talking about, where not only, if the dollar is weak as it has been, not only does gold get some demand there, but also with recession fears, gold could perform especially well versus the rest of the market in that environment. Have I done GU? Yes, we already did GU a little bit at the beginning, but I can I can circle back to that in a sec. We have a few more pairs to get through though. When I take my trades, how do I place my stop loss? I typically place my stop loss above or below structure, but I like to place my stop loss. I think the easiest way to think about a stop loss is placing your stop loss at an area of invalidation. Place your stop loss at an area where your trade becomes invalidated, right? So let's just say for gold here, right? Let's just say price moved into this area and I wanted to pick up some buys in this area. Where would price be invalidated? Where would this buy idea be no longer valid? Well, I think it would be no longer valid maybe once we broke through these lows here, right? Once we started breaking through those lows here. So I could go ahead and I could place my stop loss maybe right there, and then I could target the continuation up to these highs for like a nice 2.36 risk to reward, or I can even potentially get more there, right, by holding that trade for the continuation. So basically, I'm giving myself a nice margin for error. If gold wants to briefly deviate below these lows and then reclaim it, right, I'm going to be safe there. But if gold comes down here and breaks this structure, then most likely that trade is invalidated and this buy idea is no longer good. So that is where I would look to place my stop loss. You have to find the balance between an area of invalidation in the market and to where your risk to reward is still good. That's the game that you have to play with your stop loss. Right? You don't want to be so forgiving with your stop loss that you have no risk to reward. That would not be good. But you want to be somewhat aggressive with your stop loss so that you have a good risk to reward, but not overly aggressive either, to where if there's even the slightest, deviation or run of liquidity, then you get taken out and then, price just continues in your direction. So it really depends on your strategy, but the easiest thing that I would say for stop loss is try to find an area of invalidation where the risk to reward still makes sense. Have I done Euro JPY yet? Yes, I did Euro JPY. So we're going to do some other pairs before we go back to that one. Can I ask a question? If I had $100 in my balance, how much profit can I do in a month? That's a very, very subjective question because it depends on how much you're risking. I mean, theoretically, right? If you never lose a trade and you go on a massive winning streak, you can make unlimited profits off of $100, right? You can make unlimited profits. But what's realistic is and what's possible are two very different things. So what I would say, if you have $100 in your account, most likely you're not going to become rich off of a $100 starting balance. The truth is, the ugly truth, the truth that not many people want to realize is that in order to consistently make profits trading, like, it requires some capital. You need a good amount of capital to really, really do well with trading. And if you don't have that capital, instead of focusing on trying to gamble to make that capital, focus on developing the skills, right? Because the skills, whether you're on a $100 account or a $100,000 account, the skills are the same. If you can master your strategy, if you can master your psychology, if you can master your discipline, and you can actually be consistently profitable, then it doesn't matter if you have $100 or $100,000, it's the same skills. Once you have those skills, then you can go hard on the capital, right? Then you can do anything possible, work more jobs, start a side business, try to get funded with a funded challenge. There's things you can try to do to get capital. What I don't recommend is trying to flip that $100 into some crazy amount. What's going to happen more often than not, 99% of the time, is that you're going to just lose the $100 and you're going to be back to zero. So try to develop the skills, then go for the capital. And, that's the ugly truth about it. But the chances are you're not going to get rich off of $100. All right, we'll do some more pairs now. Euro USD. Yeah, so gold, just to wrap up my thoughts on gold, I think gold is pretty bullish. I think it has its own bullish narrative right now with recession fears. So you're just kind of waiting for some pullbacks, and I really like this area right here for potential bounce and support to hold for the upside. That's kind of my final thoughts on gold. Let's move on to Euro USD. Try to focus and to save that $100 in your first month and then add $100 every month. Yeah, like if you have a job and you can spare to fund, like if you can trade with normal risk management using 1-2% risk, and you can be consistently profitable, and you have a job and you can, anytime you get some extra money from your paycheck, put an extra $20 in your account, put an extra $50 in your account. Now, not only are you growing it percentage-wise, but you're also just adding to the balance. And then maybe in a few years, then you can have, you know, a significant balance to really make money at this. So Euro USD looks quite bearish. Actually, it looks pretty nice right here. We're rejecting here on Euro USD pretty aggressively. You know, I like this range here on Euro USD too, because from the break of these lows to this kind of next level of demand, we have about 130 to 160 pips there, where you have a pretty nice range for potential downside. Let's take a look at the edge finder. Euro USD is not getting a strong sell reading. Let's see. It's probably, if I had to guess, or hold on, let me put everything back on. I want to see what Euro USD is ranking right now on the edge finder. Currently, it is getting, so it's -2. So it's neutral, but it's one tick below being a sell rating. So we're moving kind of into that sell territory for Euro USD. And if in the next couple of days, right, we start to get some more of those factors flip bearish, that could end up being a -3 or a -4. So it's not a terrible idea to be looking at Euro USD sells right here. You know, I like this potential rejection here. Let me go take a look back at the DXY. Look how all this old stuff keeps. Does this happen to you guys where your old stuff just keeps popping back up on TradingView? It's very frustrating. Look at all this. It just pops back up. But yeah, the DXY. So the DXY is rallying here. If it could break these highs. So this is what I'm going to be keeping my eye on. If the DXY can break these highs and make bullish structure, right, then something like Euro USD, in my opinion, could be a pretty good idea. So I'm going to keep my eyes here on Euro USD. I like how we've broken and retested here. I think it's still a little early right now, although, I mean, an entry here would not be a horrible idea. The risk to reward is really nice there on an entry like that. So I'm going to keep my eye on this. I'm going to keep my eye on this and monitor it. I don't think I'm going to take an entry right now. But maybe if we get some more confirmations, right? Maybe if we get some more confirmations, maybe we get like a double top or something here. That could be something that I'm interested in. So I'm going to keep my eyes on Euro USD. I'm going to put this in my watch list. And we're going to monitor how we react here on this level. We have 23 more minutes until this hourly close. So we'll get a little bit more information once this hourly candle closes. If this hourly candle closes bearish like this, that'll give me a little bit more confidence in a potential Euro USD short. So I like the idea of going short on Euro USD. I think there's some nice confluences that point in that direction. Yeah, we'll keep our eyes on this one. We have to wait for this hourly close at the very least. What's the amount that you should pay to subscribe to the Edge Finder? I don't know the price off the top of my head, P. Krish. I hope I said that right. But I think you can get a free trial, and then you can use my code Jake at checkout to save a good amount. I think 20% or something like that. You can use my code. So use my code JAKE, Jake, JAKE at checkout, and you guys can save a pretty good amount on the Edge Finder. But if you want to check it out first before you go ahead and buy it, you can get the free trial, right? Click the link right now in the chat, get the free trial of the Edge Finder. And then if you like it and you want to go ahead and buy it, use the code Jake at checkout so that way you can get a discount. How much amount of money should you risk at least? It's hard for me to answer those types of questions. It's very hard to say because I don't know what your situation is. Are you down to your last amount of money? Are you playing with money that you don't care to lose, right? So it's very hard for me to say how much you should risk. What I'll say is how much I risk. I personally only risk 1% per trade. That's all I risk. There have been times earlier in my trading where I'll risk 2% or 3% to try to be a little bit more aggressive. But then what happens is if you go into a period of a losing streak, let's say you lose 4 trades in a row, if you're risking 3% and you lost 4 trades in a row, you just lost 12% of your account, like in the blink of an eye, right? So I prefer to kind of have more of a slower growth, but less drawdown, more consistent growth on my P&L, which is why I like to risk 1%. Psychologically, if I go on a losing streak, right, instead, I'm not going down 12%. I'm not going down 15%. I'm going down 4%. If I go on a 3-trade losing streak, I'll go down 3%. one good trade and I can make most of that back or all of that back, right? So that's why I've kind of fallen into 1% risk, but also you have to be well enough capitalized that 1% risk is a good enough growth for you. So that's why I'm saying it's very personal as to how much you want to risk. But what I will say is that you should have a risk management plan, and you definitely should not be gambling, right? You should have a risk management plan. So everybody's plan might be different. Maybe you're okay with losing a little bit more money. Maybe you know what? I want to risk it for the biscuit. I'm okay with losing this money. I don't need this money to pay my bills. Maybe I want to risk 5%. You know, it's very personal to you. You have to make those decisions. But what I will say is you should have a risk management plan. You should be using stop losses, right? You should have some sort of strategy that you stick to. Gives you long-term sustainability? Yes, exactly. Because guys, if you're planning on trading for many years, 3 years, 4 years, just think about in that time, you're statistically very probable to go through periods of losing streaks, right? If you're trading for 2 years, 3 years straight, what are the chances that you never go on like a 4-trade losing streak or a 5-trade losing streak? You know, it happens. And if you're risking 1% per trade, that's only a 5% drawdown. You know, if you're risking 5% per trade, it's a 25% drawdown. So 1% per trade gives me like good long-term sustainability, as Thunda just said. How do I deal with my losses? These are good questions, by the way, guys. How do I deal with my losses? I just keep on chugging, you know, like I try to figure out why I lost. Sometimes there's a reason why you lost. Sometimes you failed to execute your plan properly. And then sometimes the loss was just, you know, you followed your plan, but the probabilities were not in your favor. So even with my trading strategy, there's going to be trades that I lose, right? I'm not going to win every single trade no matter what. So I already know that going in. So for me, a loss is not a big deal because even if I'm following my plan perfectly, I'm going to take losses. But if I stick to my plan, I don't deviate from my plan, and I just follow my strategy, then I know over time I'll be profitable. Even if I lose 4 trades in a row, I know if I follow my plan that I'll be profitable over the next year. So just like the losing streaks come, you get the winning streaks. So the key is to keep yourself psychologically and physically in the game by not blowing your account, by using risk management, by staying disciplined. And then even after a losing streak, at some point you'll be like, oh man, I just went on a winning streak and I made all that back plus more. So I think what happens is once you have experience in the markets, you actually like experience those things firsthand. Like you'll go through a losing streak. You'll get down about it. You'll start feeling bad about it, but then you stick to your plan. You go on a winning streak and you're like, oh, that's how I do that. You know, just got to stick to my plan. And then eventually it will come back around if you have a good plan. But what a lot of people do is they go on a losing streak and then they start to spiral out of control. They start to not follow their plan. They start to break their rules. They start to over risk and gamble and try to revenge trade it back. And then you blow yourself up before you have the chance to play those long-term probabilities. You don't use any indicators. I do use the Fibonacci, so you can consider this an indicator or a tool. But I do use the Fibonacci, but I don't use any like oscillating indicators, or I don't use like volatility indicators or anything like that. If I have a winning trade, will I continue trading? I mean, for the week, for the month, like for the day. Usually if I have a good trade, I won't trade again that day. Yeah, if I hit a really good trade, I'll usually just go, just go to the gym and just focus on other things. Why stress yourself out? You just made money, take the win, That's how I like to think about it. Do I grade my trades? I don't grade them, but I do journal my trades, and I review all my trades. These are great questions, by the way, guys, and I love answering them. You have one trading year. My monthly growth is only $3 for $100. Is it good or bad? What do you think? All right. Well, $3 on a $100 account is 3%. So if you can do 3% a month, that's fantastic. That's great. If you can do 3% a month for many years, think about go to compound calculator, type it on Google, Forex compound calculator, start with your starting balance, do 3% a month for the next 10 years and see what that comes out to. So yeah, that's good. It's just you need more capital, right? So that's focus on your strategy, then focus on the capital. What's your TP strategy? For instance, if your trade's going well, how do you ensure that you don't make a loss later? I do move stops to break even at a certain point, and I do scale out of my trades at a certain point. So let's just say, for example, I'm not jumping in this trade right now, guys. I'm just saying, just as an example to answer this question. Let's just say I did take this trade. And then we got down to this area here at like a 1.7R. At this point, once we start retesting these lows, right? Let's say this trade goes in my favor here and we start to retest those lows. I'm going to move my stop to break even because at this point, there's no point for me to turn a 1.7R trade into a loss. Just psychologically in just actually, you know, for my P&L as well. Like there's no reason for me to turn this trade into a loss once it starts to retest like a significant level like this, because there is a potential that price would bounce off this level and come back up and break through that area there. So at that point, I would probably move my stop to break even, right? And then let's say we get down to like a 2.5R here at this point, and then let's just say we start to interact with some of this, you know, previous demand down here. At this level, maybe I take half my profits there. I take 50% of my profits there. And we continue to move down and we retest that area. Maybe I take another 50% of those profits. And then I try to just scale out of my trades and get the maximum amount that I can. And then let's just say we're all the way down here, right? And we make a higher low and then we start to move down. At that point, maybe then I take my stop loss and I move my stop loss all the way above that structure. So I kind of use a combination of scaling out of my trades and also trailing my stops. I try to basically just lock in as much as I can but while also giving my trade room to breathe, because I've had problems in the past where I'm a little bit too aggressive with the trailing stop and taking profits, and I leave profits on the table. So it's all a balance, and you know that's something that I still work on with my own trading, is finding that right balance of like taking profits, trailing stops, and also managing risk. It's a very delicate balance. And there's always going to be ways that you could have done better, right? You're always going to be like, oh, I should have held that trade longer. I should have taken more profits there. I should have went stops break even, right? There's always going to be a way that you could do it better. So the key is to try to just optimize it over time and make the right adjustments and do the best you can with that. I'm going to try to answer all these questions. This is a good question. Would I, if given the opportunity, to trade with an IB or join a hedge fund? I think right now, no, because I'm, you know, building out my personal brand on YouTube and I'm trading personal funds and I'm doing pretty well. And like, why mess with a good thing, right? Like why mess with success? But, you know, 5 years from now, 10 years from now, when I'm in my 30s, if I had an opportunity to work with a hedge fund, you know, that would be interesting down the road. So I'll never close the door. But right now, I don't think I would change what I'm doing. You blew your account already following your plan, but you keep on losing. If you blew your account and you were following your plan, Nihad, I don't mean to sound like rude or mean or anything, but it probably wasn't a very good plan. So I would go back to the drawing board with your plan and try to find a plan that uses a risk management, right? And then you probably won't blow your account. Because if you think about it, if you're risking 1% per trade, it would take you like 100 trades to blow up your entire account. You know what I'm saying? So you'd have to lose 100 times in a row. So I would say you're either over trading, over risking. You're probably not following your plan, I would say. But if you are following your plan, then maybe you need to revise your plan. I'm going to try to answer all these questions here, guys. This is a great, I love being on the A1 stream, by the way, guys. So shout out to the A1 team for continuing to invite me back on. But you guys are always very positive. I love answering these questions. And, you know, I'm here every Tuesday. So I haven't been the past 2 weeks, but I was sick and taking a little break. But I'm back now. How easy is it to get a funded account? It just depends. It depends on a lot of things. I could do a whole video, a whole live stream on that, on like the different strategies to pass funded accounts and whatnot, and like the pros and cons. But I would say, how easy is it? It depends if you go on a win streak, right? If you go on a win streak, then it's easy because you hit the profit target and you're good. You know, if you're going on a losing streak, it could be very hard to pass it. So it just depends on like how you time it. You know, a lot of traders, even good traders, don't pass it on the first try because you just happen to go on a losing streak, right? Like I said, even for me, with consistent profitability over all of 2022, there were periods in 2022 where I had bad months. There were periods where I went on losing streaks. So if I started up a challenge and then I went on a losing streak, I would fail it. But if I started up a challenge and I went on a winning streak, then I would pass it. So it just depends on you know, depends. It's a little bit, you gotta get the timing right. I don't want to say it's luck because really nothing is luck, but I would say it's more timing. So it's not easy to pass a funded challenge, but I would say it's a lot easier to pass a funded challenge than it is to keep a funded challenge. A lot of people pass the challenge, but they can't keep the account for many months or years. How long have I been trading? Over 3 years now, Ismail. Well, I've been trading for 6 years since I got into like the first ever, like started messing around with stocks and crypto, but Forex for over 3 years. I think that's probably what you were referring to. It would take much longer than 100 trades to blow your account, seeing that 1%. Yes, exactly. If you think about it like that, Thunda, that's correct. But just to keep things easy, I was like 100 trades. But exactly that. It's even harder to blow your account risking 1% because if you lose, then it's 1% of the, you know, the lower equity. So theoretically, if you're only risking 1% per trade, you could never blow your account because it'll just get infinitesimally smaller, right? The amount of risk you use. What do I think about harmonic patterns and do you trade them? I don't really have many thoughts on that because I don't trade them and I don't know much about them. Gold had a double top on the 15-minute time frame. Yeah, definitely. I could see that there on the hourly as well. We got that little double top up there, right? We got this little double top and now we're coming back down. So I still, going back to my analysis of gold earlier, right? I still think gold is pretty bullish. I actually really like this area right here, this previous resistance turn support area. Could we potentially move into that area? This could be a good area to buy gold, in my opinion. So I'll be keeping my eye on that area there. Go ahead and set an alert. Whoa, what just happened there? Oh, I thought I had my line out. We'll go ahead and set an alert there for gold. If gold moves into that area, I may pick up a buy. I'm also looking at pound yen. All right, I have an alert here for pound yen. So just to kind of go back to the charts for a second, these are the three main things that I'm looking at here probably, guys, for potential opportunities for me personally. If pound yen can get a move up into this level here, right, which we talked about earlier is like that 50%, in between the 50% and the 61.8% level, right? If we can get that retrace up into here, I think this is a good opportunity to sell pound yen. Not only from a technical perspective are we bearish, but also the edge finder has pound yen as a -5 sell. So there's some nice confluence there with the edge finder. There's some nice confluence with the technicals. I like pound yen sells. Just got to wait for that pullback. So that's what I'm waiting for. I have my alert set, right? The next thing that I'm kind of looking for is USDCAD. If USDCAD can break above these highs here and get a retest, I like the idea of being long on USDCAD because from a technical perspective, this would be a great setup, right? And then also the edge finder has this as a +7 buy currently. So USDCAD getting a strong buy reading on the edge finder. Plus from a technical perspective, right, I think we're bullish on USDCAD. We're here on the 4-hour time frame. We're in a bullish trend. Even if we zoom out further than that, we're in a bullish trend. So now the question is, can we actually break and reclaim these highs here? That is what I'm going to be looking at for USDCAD. So then we have kind of two things on the watch list there as potential ideas. The next thing that we just talked about is gold, right? Can gold potentially move into this area and get bullish off this area? I like that potential idea as well. So I have an alert set there. We'll put gold on there with a potential buy on the watch list. And then I'd say moving into like my other setups that could be good, I'd say like AUD USD. We kind of already tapped up into there. I wonder if that was all the retest we're going to get. I wonder if that was all the retest we're going to get. But if we do get like that full retest of this previous area here, I think AUD USD would be a good sell, and I think Euro USD also. Euro USD may be a good sell right now, to be honest. You know, I think Euro USD could be a good sell right now, but the DXY hasn't broken back above these highs yet. We're still in this range. So this is what I'm kind of talking about, just like following your plan and staying disciplined, where it's like I came on here and the first thing that I said on stream was that I'm not really taking a trade until the DXY breaks out of this range. And we're still in the range. So yes, Euro USD looks pretty good right now. And maybe I missed this trade, right? But I'm going to stick to my word, and I'm going to wait for the DXY to break out of that range. I think Euro USD looks good though. Like, it's not a bad idea. It's not a bad idea. 39 pip stop loss. You have like a pretty solid risk to reward just down into this area here. It's not a bad idea at all. But I'm going to wait for the DXY to break out of that range there. So I trade directly off TradingView through Owanda. No, I don't use Owanda. Owanda has high spreads, and like there's pros and cons to Owanda, which I don't want to get fully into right now. I could talk about that maybe on my own stream or on a different time. But no, I don't. I use MT4 and I use a different broker. Owanda is great. It's a regulated broker, and there's a lot of benefits to Owanda, but there are certain downsides as well. Like, you do have much higher spreads, and you can't trade gold on margin. Like, there's certain things that Owanda just doesn't offer to U.S. clients. And that's not anything to do with Owanda. It's more just like U.S. regulations, you know? How many hours would I recommend screening the charts on a normal day? As long as it takes to find a good setup, or if you don't find anything, then just go, live your life. Like, what I like to do is I like to just set alerts, and then I can just go live my life. And then when my alerts get hit, then I can just jump back on the charts. All right, guys. I think I'm going to wrap it up. We're getting close to kind of 11 a.m. here, so I think I'm going to wrap it up. But thank you guys so much. It's been an absolutely amazing stream. It's good to be back. And it's good to be sharing my ideas with you guys, looking at the charts. I wish all you guys a very good start to the year. Hopefully we can all get some good trades to start the year and be profitable. If you guys are not subscribed yet to A1 Trading channel, go ahead, subscribe to the channel right now. A1 Trading. Nick goes live with a different guest every single day of the week. I'm here every Tuesday. So if you want to see more of these streams, subscribe to A1 Trading right now. If you want to subscribe to my channel, personally, my name is Trader Jake. You can come check out more of what I do over on my channel. But thank you guys so much. Absolutely some amazing questions today. I wish everybody a good rest of your day, and I'll see you guys next time. Peace out.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.